This morning, new economic relief as the Federal Reserve cut interest rates by a quarter point. Fed Chair Jerome Powell suggesting the economy is improving.
Economic activity has been expanding at a moderate pace. Consumer spending appears to have remained solid, and business fixed investment has continued to expand.
But Powell acknowledging there are still challenges ahead.
Gradual cooling in the labor market has continued. Unemployment is now up 0.3 from June through September.
The third cut of the year sending stocks rallying on Wall Street.
Stocks shooting higher.
And sending good news to people borrowing money with credit cards or taking loans on a new car. But the Fed chairman non-committal about future rate cuts.
We are well positioned to wait to see how the economy evolves.
A big reason is how stubborn inflation is proving to be, something President Trump addressed yesterday.
We inherited high prices. We're bringing them down very rapidly, and we're bringing them down to very, very good levels. They'll soon be down at very good levels.
The most recent government data shows annual inflation at 3%, the highest level of Trump's second term. And a new poll finding nearly half of Americans say they find it difficult to afford everyday essentials. Powell says a big factor keeping inflation high, President Trump's tariffs.
It's really tariffs that's causing the most of the inflation overshoot.
Americans are also feeling the pinch when it comes to homeownership, with the median age for first-time buyers now at 40 years old, an all-time high.
Is there a chance we're going to see more affordability in the housing market so more people can maybe enjoy that part of wealth creation?
I don't know that, a 25 basis point decline in the federal funds rate is going to make much of a difference for people.
All right, so they cut the rates for the third time this year. And Christine, they also seemed a bit more optimistic about the economy at large yesterday as well.
That's right. Looking forward, their outlook is a little more positive for next year, seeing a little more growth in the economy next year. They think that we could see the unemployment rate tick up to about 4.5% by the end of this year, but then it'll get better sometime next year. And that inflation problem, they think inflation, exacerbated maybe by tariffs a bit, will peak sometime next year and start to get better again. So they're seeing a bit of light at the end of the tunnel, and that's one of the reasons why so many people think they might not be cutting interest rates again here anytime soon.